Hello and welcome to DigFin Vox, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, give us a like, share, subscribe. My guest today is Yam-ki Chan, Vice President at Circle and head of its Asia Pacific business. We spoke about Circle, stablecoins, regulation, competition, and the future of stablecoins, crypto, and the dollar. Yam-ki Chan from Circle, welcome to DigFin Vox.
Thank you, Jame. Good to be here.
Looking forward to this conversation. Circle is one of the top two players in the stablecoin business with about, I think, what do you guys know, about 33, 34 billion of assets tracking USDC?
35 and a half right now.
35 and a half. Okay, still growing. And in many ways, when we talk about anything to do with digital assets or crypto, you can't get away from stablecoins. They are really the name of the game in many ways now. So excited to speak with you about what's happening in the stablecoin space from a licensing and regulation point of view, as well as a competitive point of view, and just kind of a look at really where things are headed in the big picture. When we talk about getting a license for an international peer-to-peer technology like a stablecoin and the operator behind it, what does that mean when we're talking about the various things that, whether it's HKMA or the MAS or European Union regulators, what are the issues around licensing that would apply to a stablecoin operator that is, I guess, unique to a stablecoin player?
That's a great question. And first, thanks for having me here. It's really a privilege and a pleasure, and I follow your work and the stuff you write. So it's terrific to be on the podcast. I think you are touching on something that's really emerging in this area. I mean, first of all, the regulatory framework around digital assets globally, it's still, relatively speaking, early. There's some good progress that are being made, certainly here in Asia, and then most recently in Europe as well. But it's still early days. And what we'll talk about today is probably a snapshot of where things are today and a little bit of like what's ahead. But there's more to come, and it's going to be dynamic. And I think we all need to keep that in mind that 6 months from now, a year from now, when we're having this conversation again, it could be a little different.
Yeah.
So when you look at the landscape, Asia was really at the forefront of this conversation, and probably Singapore's initial posture around stablecoins or around digital assets in general through the amendment of the Payment Services Act was the one that catalyzed a lot of the movement on the regulatory space.
Yeah.
The other, of course, being Libra. The other being Libra that woke up a bunch of central bankers around digital assets overall, and in particular stablecoins. But with MAS, with the passage of the Payment Services Act amendment, they establish a framework for digital payment tokens, DPT, and that framework covers essentially digital assets overall, and you have to be licensed in that framework to be able to work with customers in Singapore and to be based out of Singapore. What we've seen since then is other jurisdictions moving along that journey, and in some extent moving ahead of that journey. And what we saw was Japan actually passing a stablecoin law. They call it an electronic payments instrument, EPI. And that law was passed 2 years ago, and the FSA came up with rules around that, guidelines around that last June, which are now working through the implementation phase. That's actually a little further ahead than where Singapore is in terms of a specific framework on stablecoins. In Europe, MiCA had been in conversation for some time. It was going through the regulatory process, and then in July of this year, it came into force, and that was a big moment. And Circle is the first and only global issuer of a stablecoin. So we're able to issue both USDC, our dollar-backed stablecoin, as well as EURC, our euro-backed stablecoin from Europe. And we're the first company to be able to do that. And that set in motion really a new high standard of both digital assets regulatory framework, but specifically around stablecoins as well. And because of that, the drive in Europe right now is actually quite exciting. There are not just your historical Web3 companies that are looking to do more with Circle, but we're seeing traditional finance companies, banks, other institutions, asset managers, now that they have the clarity that this is an asset,
Mhm.
this is regulated by a European authority, and there's no doubts about what status is. And they're saying, okay, like how do we distribute that to our customers, and how do we build additional financial services, value-added services on top of that? And I think that kind of points the way for where now Asia needs to go. And here in Asia, in Hong Kong, I'm actually happen to be in Hong Kong today and tomorrow. So the Hong Kong government has the HKMA as well as the FSTB, the Financial Services Treasury Bureau, has published and concluded some consultation around a stablecoin framework. It's actually quite robust, and it pulls on some of the best practices that have been laid out in some of the FSB, Financial Stability Board structure. And then they're going to move that into the legislature probably by the end of this year, if not by the beginning of next year, and then move that through. And then Singapore, the MAS has published a framework for stablecoins, but that they have not yet introduced that to the legislature, their parliament, but they expect to do so probably in sometime in 2025. So the way to think about it is that stable digital assets are getting clear regulations. And then in some places, they're actually wanting to define stablecoin a little more because stablecoins are different than other type of digital assets. They play a really unique role, both in terms of an on-ramp and off-ramp into the Web3 ecosystem, but also because there are so much uses around just the movement of money and for settlement for payments that a stablecoin plays that has nothing to do with some of the crypto activities. It's just a faster way of moving money around, and regulators are seeing that and therefore moving quickly to put those frameworks in place.
So from the Asian perspective, the different jurisdictions in this part of the world, you mentioned that in Europe, Circle is a global player that's authorized now to be an issuer in Europe, both in dollars and in euros. Uh, was being a euro issuer contingent to getting that license? And when we look at whether it's Hong Kong or Singapore or Japan, is this question of issued in a jurisdiction versus issuing outside of a jurisdiction relevant?
So the European authorities, uh, we work with them pretty closely around how we would be properly regulated, what that structure would look like. We happen to have a euro stablecoin, and actually we had issued up until July, we had issued the euro stablecoin in the United States as opposed to in Europe because Europe didn't have any regulations around it. And it made a lot of sense for us that once Europe had a clear framework, and frankly, the uses of the euro or the euro denominated stablecoin would be in Europe, it made sense to shift that issuing to Europe to our French entity. In these other jurisdictions, there's a lot of conversation around issuance of local stablecoins as well as stablecoins issue outside.
Mhm.
And as you probably know, and many of your listeners and audience knows that at the moment, most of the stablecoins are denominated into dollar. And it's reflective of the fact that so much of global trade and global payments and global capital markets function in the dollar. And therefore, I think the digital world mirrors that. It doesn't like act really any
Yeah.
differently. So a lot of the conversation is around they need a framework. A lot of the regulators need a framework for local currency issuance, what that would look like, and that's right. At the same time, they're looking at how to properly create a framework to bring in a US dollar denominated stablecoin that are issued outside of their jurisdiction, but is well regulated in a proper jurisdiction with a proper regulator, and how to bring that in to create interoperability.
How easy will it be for you to operate a global system with various regulations coming on board? You know, is there a risk of fragmenting the marketplace?
So right now, the framework varies from location to location, jurisdiction to jurisdiction. And In the Singapore framework, for example, around DPT currently,
Mhm.
as well as the stablecoin regime that they are proposing, the reserves do not need to be held onshore. So under the DPT framework, they don't look at stablecoins uniquely. They look at really the quality of the company, the management, fit and proper, all of those things that happens to deal in digital assets. Of course, they look at the business model to see if it's sound and robust. And then in the MAS proposal for stablecoin, the reserves are actually explicitly permitted to be held outside of Singapore, provided that the custodians have a branch office in Singapore. So essentially, the MAS have someone that they can reach out to and contact should there be any questions. In the European instance, they have a language around local reserves, but the calculation of that has to be understood well and has to be kind of done in conversation with the regulator. And then in Japan, for local issuance, you would need to hold reserves onshore. And then for foreign issuance, it depends on the framework.
Yeah,
So I think it really varies still. It's still, that's what I mean by it's still developing.
yeah.
It
But
does make sense. Yeah, I
yeah,
think the fragmentation is a challenge though.
yeah. But Yam-ki, how when you talk about custodians w being willing to sort of have somebody that the authorities can ask questions to on shore, are they happy to basically outsource? Because that's an enforcement thing, right? I mean, these are potentially people that when we say questions could also mean I need somebody I can, the authorities might want to hold on to if there's an issue. So how happy are custodians to sort of take on that responsibility?
Well, I think the custodians essentially are holding fiat on
Hmm.
behalf of the issuers and the issuers token holders, right? So the general regulatory framework, right, the perimeter is for the issuer to be licensed or regulated in some way. That's really the what we call like the neck to choke. What's helpful there is that I think the MAS recognizes that it makes sense for if you're, especially if you're issuing a non-Singapore dollar stablecoin, that the reserves are held in places that have access to the capital markets, especially the treasury and our bond markets in those particular currencies, which isn't in Singapore, it will be elsewhere. And what they look for is that, well, who's holding these reserves and do they have a representative in Singapore? And I think that's actually quite relevant because it also sets the bar for who are the parties
Hmm.
that are holding the reserves on behalf of the token holders. It shouldn't be any willy-nilly kind of custodian. It should be a reputable custodian who have controls in place, and someone that the MAS are able to get comfort over. And I think that is true for, if you were to ask most regulators, that's what they would prefer. And there are many custodians around the world. We know the big ones. For
Yeah.
us, we use a number of the major custodians that are well known, sort of the big three. And for us, 80 to 90% of our reserves are actually held in a BlackRock managed fund with a ticker, and it's SEC registered, and anyone can see that what it holds on a mark-to-market basis on a daily basis. So that like structures like that creates quite a bit of comfort for regulators to
Yeah.
ensure that okay, the money's there. Mm.
How have regulators been influenced by last year's problems when Silicon Valley Bank collapsed? That was a tough situation for you guys. You had a lot of your reserves with SVB and caused a temporary depeg, et cetera. So I think you guys probably have internalized a lot of lessons around risk management of those reserves. But maybe you could also extrapolate if that also has become a something that the regulators ask about and is shaping the way that rules are being put in place.
Yeah, absolutely. First of all, it's important to distinguish that the for us and our relationship with our customers, they are always able to redeem with us one to one,
Mhm.
and that's contractually how we're set up. And for our partners who have relationship with us, that's always the case, and that didn't change given the bank crisis, the regional bank crisis in the U.S. What you refer to in the DPEG is really the secondary market where on various exchanges, people it's a bit ask, right? And people were thinking through how to manage that risk. And then we have honest conversations with the regulators about that, and also with our partners. Our partners were able to obviously redeem with us one to one. I think that what we try to think about was that was a situation where it's a banking risk that came into the quote unquote crypto markets or digital asset market and not the other way around. And it was a situation where a number of US regional banks were really struggling. And for us, we work with a number of large financial institutions. And we have to, like any large business or any company, we have to think a little more carefully around where do we put our funds in terms of bank counterparty risk. That's not unique to digital assets. It's unique probably for a stablecoin company, and that's why I think regulators want to make sure they have stablecoin companies that are well regulated and proper. They can understand how the reserves are set up, because the last thing you want is some stablecoin that claims to have money at some bank, but the proper safeguarding and structures are not there.
But I also take it now, a year later, a year and a half plus, it's easier to find banks that are willing to hold on to those in form of deposits. For you can put that as a deposit somewhere or in trust somewhere. Perhaps when you first built up these relationships with crypto savvy or tech savvy institutions, there weren't that many places to go.
Well, for us, thankfully, we are, regulated in the U.S. We're regulated in Singapore, and also we're regulated in Europe. So we do have a number of banking partners globally, not just in the United States, but also in Asia as well as in Europe, that are able to hold reserves, deal with settlements on behalf of us with our customers. And for us, we have a global operation, and that's part of the uniqueness of Circle as a global stablecoin company.
Yeah. So when big picture question here, Yam-ki, about how to think about stablecoin operators and how to regulate them. I guess the biggest question is, to what extent are you like a bank and should be regulated as such? So in some respects, I would probably even hone that a little, I'd whittle that down a little bit. You look like more like a narrow bank, or what it used to be called an exchange bank, rather than a fractional reserve bank where you're taking a lot of depositor money and lending that out. Although we do see a little bit of that activity, certainly at Tether from time to time. But what are the ways that you, from your position at Circle, believe that there should be essentially similar regulation for a stablecoin operator as would fit a narrow bank? Or to what extent are stablecoin operators different and the business model wouldn't work, or the benefits to the community and to the marketplace wouldn't work if you had that same kind of regulation? What do you think is the difference, or what's the same?
Yeah, it's a great point that you made, and our chief economist Gordon Liao have actually made the same point that in many ways we are like a narrow bank. We are full reserve in the way we manage our token backing, and it's very different from a fractional bank. And in many ways, we're more transparent in terms of what we hold, and we have higher frequency in terms of the what we hold in the reserves. So that's one. The second piece is, I think it's important to point out that not all stablecoins are the same. And in some ways, we at times prefer to be called a tokenized cash instrument, because there are a number of products out there that are called stablecoins, and they are stablecoins in a sense that they're pegged to the dollar, but in the way that they're structured, there are various different
Mhm.
structures, and they come with different risks. What we've chosen to do intentionally is to narrow those risks. We only hold dollar reserves or cash and cash equivalents for USDC. We don't take on other counterparty risk with loans or other digital assets or precious metals in our reserves, and that's intentional. And there's some trade-offs, but we believe that is the best way that it should be structured. We're also then, because of that particular structure, designed it, as I mentioned earlier, in with the reserve fund that's managed by BlackRock, that creates tremendous amount of transparency
Mhm.
on what's held. You can actually look at the holdings of the fund down to the serial number of the bill. That's really unique. At the same time, there is a need for proper regulation around stablecoins, because especially as stablecoins or tokenized cash becomes a more integral part of the economy, not just digital economy, but really the economy, the way we move money about, the way we do payments. It is not, surprising that regulators are looking to make sure that there are proper safeguards in place. And customers, whether it is retail or large institution, want to ensure that they're dealing with an instrument that makes sense and there are proper backing. And therefore, some safeguards need to be in place. And this is not unlike in various parts of the world, there are sort of these store value facilities, SVFs, gift cards, for example, are regulated, right? And because they represent money, they are places where you need to do proper KYC in terms of the buyers and sellers. So I think that makes a lot of sense, and it's not. I think that the question you're asking around like what is the right regulation? It's a little bit of a narrow bank. It's a little bit of a store value facility, but there's still some stuff that we don't know yet in terms of the capabilities of stablecoin in terms of how they're used and implemented as the digital economy evolves, as they develop. People are going to be really creative because with every cycle of the internet, when a cost of some part of the supply chain, whether it is the cost of messaging or the cost of data becomes zero, in this instance, the cost of moving money becomes zero. What new sort of economies will be built?
Yeah.
We still don't know yet. I think that's what's most fascinating about this next evolution of money.
Yeah, and that's very exciting. I agree with you, Yam-ki. But it also raises really interesting questions about the stablecoin business model. It's kind of the future of it. So today, if we set aside something like Make or Die, which is sort of an algorithmic based stablecoin, um, and perhaps set aside a few of those that are pegged to non currencies, like a commodity or something like that. Broadly speaking, it's a USD world with a few little pockets here and there of other things. And in that world, it's essentially you guys and Tether. Tether's obviously much larger, but essentially it looks like a duopoly in many respects at the global level. And I'm sure that will change. But is the is the future of this stablecoin story around having, if not two, but maybe just a small number of global providers, or is it, you use the term, you think of it as digital cash. Well, the banks talk about, tokenized cash. The banks talk about tokenized deposits. So uh, that could open up where, JP Morgan, Citi, HSBC, et cetera, have their own. And of course, the corporates, PayPal, Starbucks, they could all have, they already do or could have their own things that kind of look like a duck, walk like a duck, quack like a duck. So that's a long intro, but my question is, how viable is the Circle Tether model in a world of many proliferating stablecoins where there's a certain fungibility, or do you see a continuing value proposition as this evolves?
Yes, and let me maybe break down a couple areas. First of all, we're still in very, very early days,
Mhm.
right? We're sort of at the dial-up stage, moving towards broadband days of the internet for Web3. There are still many merchants, institutions, and users that don't yet have a Web3 wallet to even interact in this space. And I think that will get better. So we're still in the early days. So that's number one. So the market dynamics are not set. It's like saying, when you look at the internet, there's only AOL and Mindspring. Like if for those of who are from the US that were or CompuServe, like those are the two or three, and that there will be no other internet service providers, and that's actually not the case, and it moves and changes very, very quickly. So that's the first piece. The second piece is it's important to put stablecoins and proper stablecoin, like tokenized cash, in the context of what it is, which is the dollars in the world, especially dollars in the world. There's 2.3 trillion dollars circulating in the world. Much of that I mean, that's in cash, right? These are $100 bills in circulation, and
M0. Mhm.
yeah, M0, and essentially it makes sense for some of these to be in digital form, and it makes sense for these to be movable on a immutable ledger, and that's really the opportunity set to think about. And if you were to add up the stable coins in dollar at the moment, we're at 160,
Yeah.
170
Billion.
billion. That is barely a rounding error, right? In the 2.3 trillion dollars worth of dollars in the world. So what that means is that A is early days, and B, we should expect lots of different companies that are trying to come into and innovate in this space. And we are seeing that. Almost every other week, there's somebody launching a dollar-backed stablecoin or dollar-pegged stablecoin, whether they're dollar-backed or not. It's a whole other question.
Right.
But I think everyone wants to figure out like how do you move money in the right way. So I think that's to be expected. So that's one. And then the second thing is it's important to separate tokenized cash stablecoins versus tokenized deposits because again, back to what you referred to, there is fractionalization in deposits that is not the same, at least in the way that USDC is structured. And the counterparty for that are banks, and whether you can use these outside the banking network is still, I think, quite limited at the moment due to a number of reasons. So I think it's
But
important that there'll be innovation in the payments and in currency
yeah,
space, but like what they are, I think is still early.
leaving the bank question aside, what about like a PayPal, which in terms of asset size is negligible, but they've got this massive merchant network, and over time as demand for stable coins or some sort of digital payment ramp up, there will be presumably opportunities for those kinds of companies to leverage that network. The credit cards could also, payment companies could also be an example of that. So, do you see that? Do you think about this in terms of what's the future for the Circle's business? Do you have a sense that you might need to evolve your business to make sure that you have that kind of reach, or you plug in on top of them somehow to service them?
That's a terrific question, and it tells me that you're quite sophisticated in looking at this space. And I think our part of our value proposition is that we are concentrating our effort on making the best stablecoin, regulated, reserve backed, and a payments network built on the stablecoin. And we work with various partners to distribute the use of this stablecoin. And you would have seen a number of partnerships that we've announced throughout our time working together, where whether it's Grab using our Web3 wallet to be able to eventually move on digital assets. Recently, we announced a partnership with Sony on Sonium, where they have a blockchain and there'll be a bridge USDC on that particular blockchain as they develop that. So there are these various partners that we work with that are going to be platforms where the everyday users will interact with. And that makes it quite unique because for us, we're interoperable across these various network. It's not the same, I think, as some of the other partners that may be more vertically integrated. I think there are reasons why it may be that way. And I think what it reflects really is a emerging economy that is or emerging industry that's trying to figure out what's the right structure. And we don't know who's going to be. I think there probably will be lots of different type of structure that works. We don't know yet which one will be larger or smaller, but it's good for innovation to happen. When we welcome
Yeah.
this frankly a recognition that there's such a use for stablecoins because movement of money is just really difficult in the current structure, especially for cross-border.
Yam-ki, this has been a lot of fun. We could probably go on longer than I want to test your patience or that of the audience, but I want to ask one last subject before we wrap up here. Not really about Circle, but maybe you can put your corporate hat aside for a moment and really think big picture about what this means for the dollar, which is the dominant currency for settlement and for reserves. We're seeing, particularly after the U.S. has been obviously politicizing the use of the dollar. This is old news, but it has spurred efforts, particularly in places like China, India, Russia, to circumnavigate some of these or de-dollarize, even if it's just an accounting gimmick rather than a true diversification away from the dollar. And at the same time, of course, concerns about if you're a U.S. I guess a policymaker, could Bitcoin or something else like that disrupt the role of the dollar as the international reserve? So these are questions that have been bubbling around for, they're interesting to talk about. But I'd like to get a sense, because the rise of stablecoins, as you say, it's $160 billion today, which is small, but it's come up. That's a large amount to come up in a pretty short period of time. I mean, these have only been around for about 10 years. Um, and yet they are almost, I think, more than 95% of these things are denominated in USD. There's clearly a demand for the ease of use of accessing dollars, whether you're somebody who can't get them in a country where it's difficult, or for whatever reason, or just somebody who wants to make a payment, and this is the easiest way to do it. So what do you see as, are the rise of stablecoins going to cement the position of the dollar, or or is this sort of a temporary phenomenon, and it will start to leak away at least the political power in DC to use the dollar as a political tool? Do you have a sense of kind of what we should be thinking about and where this might all go?
It's never safe to look into a crystal ball that far ahead in time. But I think there are a couple of things that personally I think about. One is, what is the structure of the global economy, and how does it move more efficiently? And at the moment, the dollar is still the unit of account for much of assets and the unit of account for trade invoicing. And the shift away from the dollar to other denominations have happened on the margins, but not in a way yet that is meaningful. Will there be more? I suspect that there will be more announcements and more things to try, but on the aggregate, for the most part, it's really hard to convince people to move off of something that everyone around the world accepts. The second part is around the debanking that you mentioned, and essentially access to the dollar. And this is where I think a dollar-backed stablecoin that's properly regulated actually helps solve some of that problem. Essentially, the challenge is that, since, frankly, the global financial crisis, but to some extent even before that, but many of U.S. banks have started de-risking out of emerging markets, out of certain economies, for a number of reasons. You can argue because they deem it to be high risk, other times because, frankly, the business model of running a traditional bank is getting more and more expensive. And it didn't make sense to be in certain markets. The stable coins actually become really helpful here, because there is so much trading activity, as in physical goods trading, like SMEs and businesses that are in these emerging markets that are interacting with the global economy, and they need dollars. You could be, in South Africa, or in Bolivia, or in Poland, and you need dollars to be able to engage and trade with the rest of the world. And if they're unable to get bank accounts in normal banks, that actually have a real cost, not only to these firms, but to these economies. And I believe that a way to provide essentially a dollar-backed digital currency would be able to help improve the efficiencies of these firms, make them more capital efficient, and hopefully also create greater growth and jobs. So I think it's in the near term, the dollar remains sort of the focus for most firms and most users. Over a long period of time, there may be some changes, but probably on the margins.
What I find interesting about this is that clearly there's going to be a new set of winners and losers as stablecoins and broader digital assets work their way through the plumbing of the financial system all the way to the user front end. Um, but it's too simplistic to say that this one category is going to be the winner or the loser. It's obviously that whether you're a policymaker, you're a bank, or a fintech, or a merchant, there's going to be opportunities, both dangers and opportunities, as this massive shift takes place. But I'll just leave with one irony that I've observed, and you can let me know if you think this is fair or not. But the hand wringing about whether or not Bitcoin is going to disrupt the dollar seems to me to be almost replaced by the disruption of Bitcoin as its original role as a mover of money by stablecoins and USD
Yeah,
dollar stablecoins.
absolutely. And I think this is in. I've been lucky to have lived through a couple of technology cycles and have worked with some of the largest tech companies in the world. And the funny thing with technological innovation is it's never what you thought it was going to be.
Mm.
And human ingenuity and the human mind to take something that was created for A and then ended up using it for B for the betterment of the society is impressive. I mean, obviously there's some instances where it could be troubling, but the invention of penicillin to the invention of the internet to broadband, right? Like we didn't just send email faster. We built a whole new set of digital economy on streaming and social commerce that didn't exist before. And I think what I'm really excited for is, again, as I mentioned, when the cost of moving money becomes zero, what new value added, new platforms and new economies will be built because that's possible.
Great. Well, I think that's a great place to end it. Yam-ki Chan from Circle, thank you so much for joining me on DigFin Vox.
Thank you.